Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to this first podcast of 2021 and wishing everyone a great, healthy and prosperous new year. This is podcast episode 49, published on January 15th, titled Favorite 2021 Clean Energy Stocks and Funds, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stocks, symbols, and quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts, and Google any terms that are unfamiliar to you. Let's begin the new year with this great piece titled 5 ESG Stocks to Make the Most of the Bull Run in 2021. It's by Titankar Chakraborty and appeared on Zacks.com. I'll first mention the company, followed by selected comments by the author. 1. Tesla Inc. The company currently has a Zacks ranked number 1, strong buy. The company's expected earnings growth rate for the next year is 58.9%. 2. GM. It also plans to launch a considerable number of electric cars in the near future. The company currently has a Zacks ranked number 1. The company's expected earnings growth rate for the next year is 24.1%. 3. The AES Corporation is known for generating electricity across the globe, but is now focusing on developing renewables and energy storage. The company currently has a Zacks rank number 3, which is a hold. 4. FuelCell Energy Inc. specializes in generating ultra-clean power plants that generate electricity way more than conventional fossil fuel plants and does reduce greenhouse gas emissions. The company currently has a Zacks rank number 3. 5. Enphase Energy Inc. is a global energy technology company that delivers energy management technology for the solar industry. The company currently has a Zacks rank number 3. End quotes. Analysts can't seem to get away from alternative energy stocks. Here's another post that has the title 7 Alternative Energy Stocks with Massive Potential Now and Into the Future. The article is by Alex Sirius and found on investorplace.com. As usual, I'll mention the name of his pick, followed by select comments from him. 1. American Semiconductor. The Massachusetts company's focus is on improving the efficiency of both the grid and wind energy. Analysts generally recommend overweight positions. 2. TPI Composites manufactures fan blades for wind turbines that generate wind power. Wall Street rates it a nearly unanimous buy. 3. Hannon Armstrong Sustainable Infrastructure Capital comprises investments in companies in 3 energy markets: behind the meter, grid-connected, and sustainable infrastructure. It also has an associated dividend. 4. NextEra Energy is the world's largest producer of both solar and wind energy. NextEra Energy stock looks like a can't miss moving forward. 5. Iberdrola is an electricity company which operates in Spain, the UK, the US, and Brazil. The firm's clear strategy of investing in renewable growth and acquiring operations to that end should bear fruit in coming quarters and years. 6. Enphase Energy, yes, again, is a company that Wall Street generally believes in. Yet it is clear that Enphase Energy stock is fairly overvalued given its price-to-earnings ratio of 109.3. The company itself produces microinverters for the solar industry and other products which allow easy installation of residential solar systems. 7. Renewable Energy Group. It produces and trades biofuel and renewable chemicals. Wall Street nearly rates it a unanimous buy. The company has a rock-bottom P/E ratio of 4.34, which is better than 87% of peers. This company is clearly showing massive potential and can rise into the future. End quotes. Now, another top stock list for 2021 appeared on MarketWatch.com. It's titled, "Here are analysts' 10 favorite clean energy stocks to buy now," and is by Philip Van Doorn. Mr. Doorn does something interesting. He says, quote, "In order to put together a list of individual stocks, we looked at 5 of the largest clean energy ETFs and listed all their holdings." End quote. Here are the 5 clean energy ETFs Mr. Doorn reviewed, followed by a brief comment from him on each one. Quote, 1. iShares Global Clean Energy ETF. This is the largest clean energy ETF with $4.78 billion in assets. It holds a market capitalization weighted portfolio of 30 liquid companies involved in the industry. It has annual expenses of 0.46% of assets. 2. Invesco Solar ETF. This is a concentrated play with $3.63 billion in assets, holding 30 stocks, also cap weighted with 54% of the portfolio in US names. Its annual expense ratio is 0.69%. 3. Invesco WilderHill Clean Energy ETF. This ETF has $2.17 billion in assets, holding 32 stocks of companies that are listed in the US. With a modified equal weighting, its expense ratio is 0.7%. 4. First Trust Global Wind Energy ETF. This is another concentrated ETF with $406 million in assets, allocated 60% to pure play wind industry companies, with the rest of the portfolio made up of diversified companies involved in wind power generation. That means it holds some large traditional power companies such as Duke Energy Corp and NextEra Energy. The portfolio has 50 stocks weighted by market capitalization. The expense ratio is 0.62%. 5. Invesco Global Clean Energy ETF. This ETF has $301 million in assets, and it follows that what FactSheet describes as more akin to an actively managed strategy than other funds in the segment, because it follows an index designed to include companies with greater potential for stock price appreciation. It holds about 100 stocks, with a modified equal weighting. Its expense ratio is 0.75%. Further, Mr. Dawn says, we narrowed the list of 160 stocks held by at least one of the 5 ETFs listed above to 10 that are covered by at least 15 analysts, have majority buy or equivalent ratings, and positive upside implied for the next 12 months, based on consensus price targets. End quotes. Here are then the top 10 clean energy stocks favored by the analysts. 1. E.ON SE. 2. NGSA. 3. General Electric Co. 4. RWEAG. 5. NextEra Energy. 6. Enel SPA. 7. Siemens AG. 8. Turner SPA. 9. Air Products and Chemicals Inc. 10. Koninquiki. I think I got that right. Okay, so that's for that particular article. Now the next article is titled Sustainable Investing to Gain Momentum in 2021. 3 Funds to Buy. It's by Zacks Equity Research and was on Zacks.com. Zacks says that all of these funds carry a Zacks mutual fund rank number 1, which is a strong buy, or 2, which is a buy. Again, I'll state the fund name, followed by a few comments on each one from the Zacks team. 1. New Alternatives Fund Class A seeks long-term capital growth with income as its secondary objective. It primarily invests in common stocks of companies and even in other equity securities such as real estate investment trusts and American depository receipts. New Alternatives Fund Class A has 3- and 5-year returns of 17.9% and 17% respectively, and a Zacks mutual fund rank of number 1. It has an annual expense ratio of 1.08% compared with the category average of 1.28%. 2. Fidelity Select Environment and Alternative Energy Portfolio aims for capital growth. This Zacks mutual fund rank number 2 fund invests in the majority of its assets in securities of companies mostly engaged in activities related to alternative and renewable energy, energy efficiency, pollution control, water infrastructure, waste and recycling technologies, or other environmental support services. Fidelity Select Environment and Alternative Energy Portfolio has 3- and 5-year returns of 3.4% and 9.5% respectively. It has an annual expense ratio of 0.85%, which is below the category average of 1.04%. 3. Calvert Equity Fund Class A aims for growth of capital through investment in stocks. This Zacks mutual fund rank number 2 fund invests majority of its assets in common stocks of companies that rank among the top 1,000 U.S. listed companies. Calvert Equity Fund Class A has 3- and 5-year returns of 18.2% and 15% respectively, and an annual expense ratio of 0.99% compared with the category average of 1.04%. End quotes. Now, looking for dividends? Consider what Matthew DiLallo says in his article, "This renewable energy stock continues to charge its dividend growth plan." It was on the Fool.com site. Mr. DiLallo says, Clearway Energy supercharged its dividend in 2020, boosting it an eye-popping 59%. It already has enough power to increase its dividend by another 8% next year. Clearway Energy is becoming a dream stock for income-seeking investors. That increasing growth visibility powered by renewable energy makes it a great stock for dividend investors to consider buying and holding for the long haul. End quotes. Well, these are my top news stories with their stock and fund tips for this podcast. Favorite 2021 clean energy stocks and funds. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcasts and scroll down to this episode. Also, be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the ethical and sustainable values of your investments. Thank you for listening. My next podcast is on January 29th. Talk to you then. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.